and welcome to Finance Friday. I am your host, Stacey Johnson. I am a CPA, the founder of Money Talks News. I started it in 1991. Gosh, that's a long time ago. Anyway, I've also earned licenses in commodities, stocks, options principles, securities, supervisory, real estate, and life insurance. So if there's something you want to know about money, I'm the guy that you should be asking. I'm happy it's Friday afternoon. How about you guys? It's a beautiful day here in Fort Lauderdale, Florida, the yachting capital of the world. I just completed a 20-mile bike ride, so I am loaded for bear, ready for action, ready to have some fun, and ready to answer some questions. When you guys do have questions, put a few question marks in front of your question, and that way I'll be able to see the question in a field of no comments that we have so far. But anyway, you see what I mean? I'll be able to see the question easier. You can ask me anything you want. What I'm going to talk about today is what's going to happen under the new administration to your money. One of the things I want to say about that before we start going down this road is that, if you think about the President of the United States driving the bus, he's in charge, right? He drives the bus. But that bus also has an engine, and that engine is Congress. So the President of the United States can't really do anything without the help of Congress. There are some things he can do. He can issue executive orders and things like that. He can also use the bully pulpit to try to get things done, try to convince people to do things. But when it comes to passing laws, he needs help from Congress. And I'm saying this because just because you're the president doesn't mean you get to change everything. You have to get the cooperation of Congress in order to make something happen. So anything that I say here today about what could happen may not happen. None of this stuff may happen. Also, people on the campaign trail often do this. They lie. They can just say stuff to get elected and then have no intention of actually doing it. So he may not be able to do the things he said. He may not even want to do the things he said. But these are some of the things that Donald Trump said on the campaign trail. And some of these are almost certainly he's going to try to do, and many of them he probably will be able to do, but there is no guarantee. Okay, in the meantime, if you have any questions whatsoever, there's hi, Kim. Kim from Lakeland, Florida is writing in. Also, Kim works with me. Anyway, let's start with potential changes at least, in income taxes. Let me give you a rundown of what I'm going to talk about. Income taxes, number one. Then tariffs, what that could do to your money. Number three, the stock market. Number four, Social Security. And, health care is something that's important. I'm going to talk a little bit about immigration, too, if we have time for that. I'm going to be online for about 30 minutes, maybe a little less if I cover it faster and if we don't have a lot of questions. Anyway, here we go. Income taxes. Now, one of the main things that Trump wanted to do, let's go back to 2017 when the Tax Cuts and Job Acts, the TCJA, was passed. That did a lot of things to the tax code, which will expire in 2025 unless Congress acts. Okay, so one of Trump's key ideas is to re-up the Tax Cuts and Jobs Act. If they do nothing, it expires automatically. So one of the things he wants to do is have this law continue. Here's what that law did. As a recap for those of you who don't know, tax brackets went down for almost everybody. So for example, and 3 to 4 points. So for example, if you were in the 15% tax bracket, your tax bracket went to 12. If you're in the 25% tax bracket, it went to 22. So everybody saved a little bit on income taxes. Now, the more money you make and the type of the money that you make matters. Because, for example, I'm self-employed. I have a high income. So that this Tax Cuts and Jobs Act meant a lot to me. I get to take a 20% deduction of the money that my company makes. That's huge. So that alone could save somebody in a high income in a high tax bracket $100,000 or more. So it's a huge deal. The more you make, the bigger of a deal it was. And so, this is hugely helpful to people in my situation. And the reason that Trump gave for giving these tax cuts more advantageous to people who make more money is because theoretically, We're job creators, those of us who own businesses. So we got special tax breaks. Anyway, everybody got some kind of a tax break under this act. It doubled the standard deduction from $12,000 to $24,000 a year. I'm rounding numbers, and so that means a lot fewer people had to itemize taxes. It doubled the child tax credit from $1,000 to $2,000 per child. It capped SALT deductions, that's state and local taxes. You used to be able to deduct those as much as you wanted, and it put a $10,000 cap on those deductions. So the worst case scenario when this law was passed, if you were a middle income taxpayer in a high tax state, right? Because now your state and local taxes are capped at $10,000. But you don't really save a whole bunch. I mean, your tax brackets went down a little bit. So it didn't really save you very much, and it could have cost you a lot on deductions. So someone like my in-laws who live in New York, they have huge property taxes. Their income isn't huge. So to them, this was the worst. This was a bad scenario. For someone like me here in Florida with no state income taxes, this was a great deal for me. Anyway, also one more thing that's important too is that the corporate tax rate went from 35 to 21%. Huge benefit to corporations. The stock market likes that, right? We're going to talk more about stocks in a minute, but the stock market likes that. Oh, hello, Aaron. Aaron from Hollywood, Florida. Anyway, let's talk about new tax stuff. So one of the things that Trump wants to do is he wants to maintain the Tax Cuts and Jobs Act. Keep it like it is, but actually even make it better. So he wants all this stuff to remain the same. Remember, if he doesn't do anything, all the stuff I said goes away at the end of 2025. So now, new tax stuff. He wants to bring the corporate tax rate down even more. He already went from 35 to 21. Now he wants to bring that from 21 to 15. So corporations, think about that. In 2016, corporations were paying 35% of their net income to Uncle Sam. If he gets his way, they're going to be paying 15%. How'd you have your taxes go down like that by 2/3? That'd be awesome, right? So that's one of the things he's proposed for corporate tax rates. And also because so many people whined about the SALT deduction, the state and local income tax deduction being capped at $10,000. He wants to get rid of that cap. He wants to repeal that part of the law. So that means people like my in-laws in New York would be able to write off all of their state and local taxes on their federal return. Now, obviously, when you see corporate tax rates going from 21 to 15, or from 35 essentially to 15 over this period of years, 8 years, that's going to be less government revenue coming in. A ton less, right? So how does he balance that out? We're going to get to that in a minute. And actually, let's talk about it right now. One of the ways he wants to balance this out, he's going to have less income tax money coming in. So what he wants to do to make up for that is tariffs. Tariffs, of course. Now, here's something that Donald Trump said, that foreign countries pay tariffs. That is wrong. That is a lie. Tariffs are paid by the people who are importing something. If you're an importer of shirts and you're getting those shirts from China, when those shirts arrive, that tariff is a bill you're going to pay. You're an American buying shirts from China. You're paying that tariff here. Now, what are you going to do? Either you're going to make a hell of a lot less money, and especially now, remember what these tariffs are. His plan, what he said was, he's going to levy tariffs up to 60%. On everything from China, everything, and 10 to 20% on other countries. In fact, just the other day, he threatened tariffs of 25% on Mexico and Canada. So that means if you're importing things from these countries, and we import a ton, as you know, from China and Mexico and Canada, then those things are going to cost you 25% more if you're the importer. That means either you're going to make 25% less, or you're going to raise your prices. So, and also, too, what Trump is saying is, I'm going to get 60%. Now, the U.S. government is getting this money. They're taking it from Americans, but they are getting it. So they're going to get 60% of all this money. Well, what's going to happen is the world's not a stable place. I mean, there's going to be reaction to this action, and that reaction will be that our trading partners will put tariffs on our stuff. So it's going to be a trade war, right? That's the term for it, and that's exactly what it'll be. It's not going to be some static thing where we get to, our government collects 60% of everything coming in from China, and nobody here has to pay anything more for it. That's just crap. That's a lie. We will have to pay more for it. And then we're going to get in a trade war with China. And we export. Hey, ask Elon Musk how he feels about that. Ask Apple. They're importing stuff into China. And if the tariffs hit back at them, then this could be a real problem for American companies too, because we're not just importers from China, we're also exporters to China and many other countries, virtually every country in the world. So this tariff thing is a real unknown, whether it will work or not. Everybody knows, well, everybody should know anyway, the whole purpose of the tariff is so that you can encourage, well, first of all, you're protecting your existing industries. We make steel. China makes steel, but China's government is subsidizing their steel companies. So they're dumping steel on the international market. Well, that ain't fair. That's what tariffs are for. So you say, well, if you're going to artificially help your steel companies, because what they're trying to do is get market share, right? This is true of lots of companies. This is an interesting concept to understand. If you're, let's say, Jeff Bezos at Amazon, here's an example of what he did. There was a company called diapers.com, and Amazon tried to buy them. And they said, no, we're not for sale, or they didn't agree on the price. And I may have some of these details wrong, but essentially this is what happened. So diapers.com said, no, we don't want to sell it, or that's not a good enough price. So what Bezos did was he lowered the price of diapers on Amazon to such an extent, he was losing money on every diaper. But what happened was he got so much of the market that diapers.com went out of business, right? So he said, you play ball with me, or I'll just put you out of business anyway. And that's what he did. And that's what, now if you translate this back into tariffs, see, this is what tariffs are for. Because if China is going to subsidize the steel industry so that their steel companies can sell steel at below cost all over the world, what's going to happen? Our company is going to go out of business, right? Because people are going to import Chinese steel instead. So, and then what happens? Now China's got the whole market in the world because our steel companies are gone. And so then they can raise the price back. And that's exactly what Bezos did with diapers.com. Or so I read. I don't want to get sued by Jeff Bezos, but I think that that's probably an accurate story. And I think it happens all the time with lots of companies. And it happens with governments. And that's why there is such a thing as tariffs. So what happens is China says, oh, our steel is so cheap because the government's subsidizing the cost of its manufacture. Our government says, oh, yeah? Well, it's going to cost you 20% more to bring that steel in here. We're going to even out the price. That way, our companies don't go out of business while you're subsidizing yours. Does that make sense? So that's what tariffs are for. When you target things like steel that's being produced or distributed under its cost via government subsidy, then that's not fair. So what our government does is they put a tariff on that to make the playing field level. And if you really want to make our companies more competitive, then put a huge tariff on it so that no other steel in the world is as cheap as the steel we can make domestically. Then what's going to happen? We're going to make more steel domestically. It's profitable. We don't have to compete because we're going to put such huge tariffs on everything coming to this country. The cheapest is always going to be domestically manufactured. Great idea. The problem is we got to sell our stuff too overseas, and the other countries we're putting these huge tariffs on are not going to like it. They're going to put tariffs on our stuff. Also, that takes time. It takes time to build a steel plant. It takes time to build, a electronics plant. It takes time to build almost anything. And in the meantime, too, we got parts. You know how many domestic producers of automobiles don't use imported parts? 0%. Every single domestic producer of automobiles in the world uses imported parts. So those parts are going to get more expensive. In the meantime, while you can see what's going on here. The dynamic is complex. And so how it shakes out, I don't know. But if you immediately, but if you say, I'm going to put 60% tariffs on everything from China, there's going to be repercussions on that. If you say 20% on everything from Europe or 25% on everything from Canada or Mexico, there's going to be repercussions. Yeah, the United States is going to collect money. It's not going to be enough to offset income taxes. But who knows? The point is, nobody knows what's going to happen because this has never been done before. And so we'll see. We'll see if he does this, and if so, how it plays out. But one thing it could certainly do is cause inflation. In fact, the COO, the chief financial officer of Walmart, has already said, if you put 60% tariffs on Chinese goods, our price is going to have to go up because a lot of their stuff comes from China, and that's why it's inexpensive. So, I mean, and he's not the only one. There have been other people who've said the same thing. I mean, the fact is, tariffs will make things more expensive, period. And when that happens, that's inflation, right? And that can even result in higher interest rates, too. So all this stuff, it's like a ripple in a pond. You do one little thing, and then the repercussions from it are really unknowable in this situation because the amount of tariffs he's talking about are so huge. Let me take a quick look from... I think Trump needs to issue another stimulus check. Actually, Trump issued stimulus checks, and so did Joe Biden. But that is not going to occur, I can assure you. Aaron says, with a corporate tax rate of 15% and $6 trillion held in cash, some economists think the S&P 500 reached 7,400. Would that be likely? Okay, Aaron's suggesting that because if corporate income taxes go down, would that make the stock market go up? Let's talk about that. That was actually next on my list anyway. Okay, obviously lower taxes is good for corporations. The less tax you pay, the more money that goes to your bottom line. That's true of you and me, and that's true of corporations as well. So corporations become more profitable. And in fact, in 2016 or 2017, when that law went into effect, when the rates went from 35 to 21, corporations did get more profitable. The idea behind that is, and this is called trickle-down economics. A guy by the name of Arthur Laffer developed this in the Reagan administration. I remember this. Anyway, what happens is the corporation gets richer, and so what it does is it pays its people more. It expands. It's good for the economy. Or what could happen is, let's take me, for instance. I make a lot of money, and I have a lot of money. I've been doing this for a long time. I'm 69 years old. Cut my taxes. Now, if you cut the taxes of a person who makes $30,000 a year, family of four, they're going to take every dime of that extra money that they have, and they're going to buy groceries with it. Or they're going to buy clothes. You know what I'm saying? It's going to affect them. Give me an extra 20 grand. I'm not going to do anything with it but put it in the bank. I've already got everything I want. So point I'm making is when interest rates went down, or when tax rates went down on corporations, what a lot of them did was they bought back their own stock. They didn't do anything to improve the American economy. They did something to improve their own bottom line by buying back their stock. That doesn't mean they're all doing that. And the idea is that when you cut taxes, this has been going on for decades, of course, this whole argument about trickle down. And I've always said, if cutting my taxes is going to help other people, then why don't you make my taxes zero? Why have corporations not pay any taxes? I mean, if this is such a great idea. But getting back to Aaron's question, lower taxes is obviously good for stocks. They're obviously going to make more, or corporations are obviously going to make more money. And when they make more money, stocks go up. I mean, stocks are basically priced on earnings. All the stock price is a discounted value of future earnings. So the more they make, the higher stocks go. Obviously good for stocks if taxes go down on corporations. Another thing that Trump's doing that's going to help the stock market, I've talked about this several times before, is regulation. He hates regulation. And whether that's good or bad depends on your point of view. But certainly, if you're a company that's heavily regulated, like in the financial services industry, like in the oil industry, you're going to be happy with fewer regulations because regulations cost you money. Now, some might say regulations also protect public safety, and apparently this has been forgotten. And few people would argue that there's too much regulation in some industries and maybe all industries. But anyway, bottom line is this stuff is great for stocks. That's why the stock market's been going up. Lower taxes, less regulation, awesome for stocks. And that means, this is good for your savings too. I hope you have some savings in the stock market. Okay, I don't have to see any other questions. Let's talk about Social Security. Right now, if you're a married couple and you're getting Social Security, and your income, it's adjusted income actually, is $32,000. I think it's 24 if you're single and 32 if you're married, whatever. You're going to pay tax on half your Social Security. If that income reaches $44,000, you're going to pay taxes on 85% of your Social Security. Some people are bummed about that, and they should be, because this is, I don't know when this went into effect, but I think in the 1980s, and it hasn't been raised for inflation at all. So this, he's proposed to end that tax, so people on Social Security won't have to pay tax. Obviously, a great thing to say on the stump, but here's what happens in real life: that money that wasn't going into the general tax collections of the United States, it was going to support Social Security. So without that, Social Security is already expected to be crippled. I think they're going to be able to pay 70% in 2033, but it'll drop then. But with this proposal, eliminating the income tax on Social Security, it's going to be 2031. So it's going to make Social Security, hard for it to make its current payments 2 years earlier than it would otherwise. So there, as with many things in life, there's a price to pay. I've only got a couple more things, and if you guys don't have any questions, we'll end early today. Healthcare. This is important, and it's something I didn't really actually know about until relatively recently. There's 45 million Americans on the Affordable Care Act, Obamacare. Now, what the government does, if you make a certain amount of money, they give you subsidies, so you pay less for the insurance. The idea was to get everybody on insurance. That premium subsidy is set to expire in 2025. I didn't know that. This has nothing to do with Trump. This was a law that was passed, when Obama was president, but these premium subsidies will expire in 2025. Now, Trump said, I saw him in a debate say that he protected the ACA. That was a lie. He did not protect the ACA. He tried to get the ACA repealed. That was the famous day when John McCain did this, in the Senate. They tried to repeal the ACA. They might try again. Now they have both houses of Congress and the White House. They might try to repeal the ACA. This matters to people who are getting low-cost health insurance. It also may matter to people who have pre-existing conditions, like yours truly. I have cancer, or had cancer, hopefully, knocking on wood. But if you have these pre-existing conditions, that may go away. They may change that so that it's going to be cheaper for people who are healthy and more expensive for people who aren't. Right now, you have to be covered by an insurance company with whether or not you have pre-existing conditions. That may or may not change, but if it does, it's probably going to change for the worse. It's probably going to be harder for you to get insurance with pre-existing conditions, and it's probably going to cost you more too. Now, that's probable. Who knows? Again, this all depends on the cooperation of the Congress as well. I think the last topic I have is immigration. What is immigration going to do to you? You're not an illegal migrant. You're not here illegally. You're not working, in farming or construction. What do you care? Well, you care because these people, the reason they're here is because they're doing jobs that we don't want to do, and they're willing to work for less money. Now, if you take all those people and you round them up and you throw them back across the border, what's going to happen? Well, either there's going to be worker shortages, or you're going to be paying people more money, obviously, to do that job. Either one of those two things means what? Higher prices. So whether that shows up in the price of a new home or in the price of a head of lettuce, we don't know, but certainly the macro effect would be that it's going to be more expensive for things where migrants are heavily involved. Also, migrants, by the way, pay, legal or not, they pay into Social Security. So that's another thing too that'll shorten the Social Security's viability. So that's about all I have, I think. But let me go ahead and see if I can summarize all this stuff. In other words, what should we do about all this? Well, you probably want to be in the stock market. You want to be in the stock market anyway. Now, I will say this, though, too. The stock market's overvalued by almost any historical measure. The stock market's overvalued. So personally, I have a lot of money in the stock market, not tons, percent, a high percent of my net worth, maybe 30%, which is relatively low. But I'm staying in the stock market. I'm not taking money out, and I'm probably going to put more money in, but I really have to see a pullback first. Most of the money I've made in the stock market, in fact, the last time I invested tons of money in the stock market was 2009, when the Dow was in horrible situation. I mean, it looked like everyone wanted to buy canned goods and shotguns. I mean, it just looked like everything was going to hell. And I bought then, and I made a ton of money on it. But I don't really like buying at market tops. I also don't like being left on the sidelines. And I think the market, obviously the market's gone up 6% since Trump was elected. So I think definitely be in the stock market. But if you are going to go more into the stock market, try to average in. Don't put everything in now. Put 10% in a month and average in that way. Because I'd be surprised if there wasn't a pullback. I think the S&P is trading at about 23 times earnings, maybe 21, something like that. Anyway, I think it's pretty highly priced. Usually it's about 16 times earnings. So I would be careful about that. And also, I'm not sure what's going to happen with this tariff thing. That's not good for American companies if there's a trade war. I mean, flat out isn't. So, I'm a little concerned about that too. So I'm not taking anything out, but I'm not putting a whole bunch more in now, at least. That may be a mistake, but that's what I'm doing. Let's see, what else would we be doing? I'd say just keeping an eye on the news, because like I said, some of this stuff was just talked about. Some of it's going to happen. But, the sooner you figure out what's going to happen and what isn't, the better. And the only way to do that is just keep your ear to the ground, right? See what's going on. And pay attention to the tariff stuff, too. Are they really going to deport 6 million people? I think I've read between 4 and 6 million illegal migrants are working in the United States. I don't know, obviously none of us know what's true and what isn't, but certainly there are millions of people working. And if you round up all those people, and by the way, also their families too. Remember, if you've got an illegal working husband, and then you've got 2 kids and a wife, they may all leave, right? I mean, the husband's going to leave. But even if the other 2 were legal, they may leave too. Obviously, just to maintain their family unit. So this is going to be ground-shaking stuff, and I just don't know how to advise you whether it's going to happen or what the effects will be. So all I can advise you to do is just try to keep your eye on it and do the best you can. But do expect your taxes to go down. Really good for me and hopefully for you. Do expect the stock market to remain firm, if not get higher. And and if you're on the ACA, really keep an eye on that stuff too. If you're on the Affordable Care Act, really keep an eye on that stuff. It's going to be a wild time, that's for sure. It's not going to be boring. So we'll just have to wait and see what's going on. Oh, I've got one more thing here, and then it's time to go. Social Security, does all the money we pay in Social Security used for Social Security, or the government use it for other things not related to Social Security? Social Security is really kind of a bookkeeping thing. It's not that we're paying into Social Security and then that money sits in a bank account and then pays out. So it's a complicated question, but really the truth is it's more of a bookkeeping thing. Here's how much we're paying out. Here's how much we brought in. The government doesn't take this money and do that with it. So that's a more complex question than that. So, but if I had to answer your specific question, does all the money we pay in Social Security use Social Security? I would say yes. Can the government use it for other things? Perhaps, but I mean, basically the government's borrowing. The government's spending more money than it has now. So, I would say it does get used. And I don't see any other questions, and I'm I'm out of time. It's 1:29. Thank you guys so much for tuning in. Don't forget to go to moneytalksnews.com, subscribe to our newsletter, go to our retirement site too. It's our Facebook retirement group, Money Talks News Retirement Group on Facebook. Register for that. We're on YouTube. We love to do videos. We're on YouTube. We're on Instagram. Whatever you can look at or read, we're on. So anyway, and tell your friends too. I appreciate it. And I want you to have the best weekend you've ever had. Let's get started. Let's do it right now. I'll see you guys soon.